Good morning, everybody. Welcome to the wonderful world of Nexgen, of education, of patterns. Good to see you. Hey, Steve. Guys, today is Tuesday, July 22nd. And Andy, I'm not sure which news you saw. Oh, that was at 8:26 a.m. That makes sense. Andy says, hey, check it out. Fed Chair Powell speaking at 8:30. It's medium impact. That could mess things up. Good morning, Alex. Um, Every morning, I come and I check news, and I'm looking specifically for high impact news. I'm looking for things that could mess up the fun that I'm trying to have in this market. And guys, anytime I see a red box or even an orange box, I just say to myself, hey, this could mess up my patterns. This could change what I'm looking for. This could make the market spike, jump, bump, or do other things. Hey, good morning, Ron. Good to see you. So this is just my first stop. Pour a cup of coffee, go in and take a look. Um, and then I start opening charts. Um, and when I'm looking at charts, guys, I go through a couple things and I talk about to myself as these charts load up, do I have the advantages I need to find a trade? And that's what we're going to talk about this morning. And guys, we're going to talk about three concepts. And first, I'm going to stay. Um, yeah, Pal probably didn't say much. Guys, I'm going to stay on NinjaTrader for just a little bit. Um, I was thinking about it last night, and guys, I'm rarely right. That's why I'm married. But I was going on the idea that going back and forth may prove difficult for some people, right? I'm getting information about two different platforms. Maybe it's a little confusing. So I'm going to go through the high probability trend trade real quick. We're going to talk specifically about NinjaTrader, and we are going to look at three concepts. We're going to look at momentum. We're going to look at a clear path, and we're going to look at an entry area. And guys, this is the recipe for a trade that typically wins 70 to 80% of the time. This is what we call the high probability trend trade. And I got some of the best messages yesterday. And guys, very often in the room, I'll get, hey, do you understand where I'm at? And everybody says yes, or everybody says nothing. And then privately, someone says, hey, guess what? I need a little help with this concept. I got a picture sent to me around entries. And I was like, okay, cool, let's do an entry lesson. And maybe you need a little help with indicators. And cool, let's do an indicator lesson. And guys, if you ever don't want to post in the room and say, hey, I don't know what's going on with this, send me a message and I'll create a lesson for you. So today we're going to talk about first NinjaTrader, high probability trend trade, guys. It is three rules. That's all it is. And these three rules come to be on only two charts. So we're going to talk about the charts that we're going to use. First, we're going to use a large chart, guys. And this large chart is a very slow chart. It's a very broad stroke of a brush, and it kind of shows the overall opinion of the market. On this large chart, it takes one bar. It takes that first bar to be able to recognize momentum, direction, in the areas that could be problematic. So this large chart leads the way is the easiest way to say it. And if the large chart doesn't say go look for a trade, it's cool to not go look for a trade. Guys, we don't want to fight or go against this chart. Your first two rules are met on the large chart. Your small chart is an entry chart. Your small chart is finding a way to get into the market because of the advantages that you see on a large chart. So your large chart is going to give you strong triggers, which is going to give you the advantage of momentum. The large chart is going to define the areas that can be problematic. Guys, 2/3 of the good stuff comes from that big, slow chart. Your small chart is a refinement chart. Your small chart is taking that one bar of goodness and breaking it down into 20 to 30 bars. And this is where you're going to define entry. And this is how you're going to be able to reduce risk. And this is what's going to let you take advantage of those large chart advantages. So large chart's going to define momentum. Large chart will define your path, letting you know if it's clear, if there's problems. And then finally, when the rules are met on the large chart, we're going to go to the small chart, the fast chart. And you guys are going to get crazy accurate on your entries, so much so that you sing songs of joy. So let's start with momentum. Momentum leads the way for a reason. And guys, momentum is a byproduct of the people that are in control of the market. The large chart, I want you to think of it as a large crowd, a big group of men and women with all of the power, all of the money, all of the influence. And these guys create trends, and these men and women create momentum, and these men and women react to the areas that you see on the large chart. So the large crowd typically wins, going with the flow. The small crowd is your small chart, and these are a group of ne'er-do-wellers. These are hoodlums, hooligans. They smoke outside of the dime store and they ride motorcycles, guys, and they love to fight. And they create these little pushes, these little retracements that are against everything that the big crowd wants. Hey, good morning, Chariot. We're going to rely on the small crowd's fight, guys, and we're going to use their fight to pinpoint our entries. And the cool thing is, the small crowd loses like 70 to 80% of the time. So when the rules are met and we use their failure point for entry, we have the potential to win up to 70 to 80% of the time. And that's why we teach the high probability trend trade first, because what it does for you is it teaches you to recognize momentum. And you'll use momentum in other ways as you grow with the software. It'll teach you to recognize when there's no trouble in the way. And you'll use that concept to find other ways to get paid. And it teaches you how to define an entry initially and giving you the ideas of where stops belong and expectations. So we're going to focus on this one. And then once we go through the rules for this one, we're going to talk a little bit about TradingView. I'm going to go back and forth. Guys, the only way I know you need help is if you tell me that you need help. So remember, if I'm going and I say something you don't understand, do me a favor. Throw something at me and say, hey, Mark, back it up. Let's talk about momentum, guys, and let's talk about the indicators that create momentum. Both charts, small and large, will have what we call trigger lines. Trigger lines are just moving averages. I'm not mathy enough to understand how they come to be, but what I do know is that two solid lines are my small triggers. These are a fast moving average. Two large lines, dashed lines, these are my large triggers. These are a little slower moving. Triggers are going to work in everything you do, but we're going to let them define momentum first. The trend is defined by the color of the background. If you're colorblind, and I know that sounds silly, but I'm very serious. If you're colorblind, let me know and I'll teach you a little cheat. But when the background is green, the market is going up. We're looking to go up with it. When the background is red, the market's going down. We're looking to go down with it. Strong triggers means that in an uptrend, when the background is green, both your small triggers and your large triggers are also green. The small triggers are up and above the large triggers, and the large triggers must be wide and angled in the direction of the trend. Strong triggers is the separation between the small triggers and the large triggers, and it looks a lot like scissors that are opened. As long as I have a gap between those triggers, the odds are favorable for the market to continue up, and the same is true going down. When I have that gap in the triggers, when the space is there between the small and large, guys, the odds are favorable for the market to continue down. So odds favorable momentum is the phrase that I use when I have strong triggers. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum is what I look for to break key areas, guys. Odds favorable momentum will even help cover some of the mistakes that we tend to make as new users. It's hard to stop, but it does. And guys, when the small triggers work their way inside of the large triggers, when there's no longer a gap, no longer space, this is what we call weak triggers. When I have weak triggers, anything can happen up or down. The market may retrace from the middle of nowhere. Key Fibonacci areas are more likely to hold. And guys, you recognize this advantage on the very first bar of the large chart. So small triggers are above the large triggers, and there's space between the two. Can you guys give me a Y if you're working on NinjaTrader And this is your look for momentum, guys. This is the best of the best. This is a market that's going to be hard to stop. Let's see what it looks like on crude oil. Oh my gosh. Smalls below the large, space between the two. Ladies and gentlemen, we do have odds favorable momentum on two different markets right now. And that's it. This one bar, momentum. If you can see it, you're a third of the way. You're 33% of the way there. Guys, momentum is outstanding, but momentum can be stopped by areas. You're going to see these areas on the large chart, guys, these areas. Some of them are based on tens of thousands of calculations. Some of them are based on one calculation, but they all have the same weight. They all have the same value and the same importance. Horizontal lines, whether it is Fibonacci resistance, Fibonacci support, yellow one-to-ones, divergence highs, or divergence lows. That's a lot to take in, right? Horizontal lines on your big chart are where these guys and gals are making decisions. These are where they are entering the market, where they are exiting the market, where they are fighting one another to take control of the market. So any of these areas could stop forward progress. There's a pretty simple recipe for knowing whether or not a line is problematic, whether it has the potential to break, or whether it's in the rearview mirror. And we're just going to count triggers, guys. So if the large crowd, if the men and women that control the market are making decisions at these lines, we're going to let them get to the lines, guys. And when they get to the line, there's going to be decisions made. Let me use this picture first because it's just determination. The background is green. The trend is up. The triggers are up. The momentum was great. Maybe you found a long trade. And the market continues up and the price bars continue up and the big crowd buyers are in control. And when they reach a line, when they reach Fibonacci resistance, a divergence high, yellow one-to-ones, all you have to do is ask yourself, where are my triggers? And if your triggers, all four triggers, both small, both large, remain below that area is a termination condition. That area could stop the forward progress of the market. That area could create a big, ugly, untradeable bounce that pulls you out of a long position. Rule number 2 says absolutely no trades into that area. If that termination condition reverses the market, we're going to call it a strong top. So a strong top means that price reaches Fibonacci resistance. The sellers were so adamant on taking control of that market that they reversed it. You'll see it in the large triggers going from green to red. And if they give you your rules met going the other way, guys, that's the highest probability trend trade you could ever take. You don't have to have a strong top to take a high probability trend trade, but it does add warm fuzzies. All the momentum, the market is pushing down, life is good, sellers are in control, and then they reach Fibonacci support and yellow one-to-ones. And all you guys do is ask yourself, where are my triggers? And if my triggers remain above Fibonacci support, guess what? This is an area that could stop the market. This is an area that could create a big untradeable bounce. This is an area that if it reverses the market becomes a strong bottom. And guys, absolutely no trades into that line. So this is your termination. Price reaches, where are my triggers? Below resistance, sit on your hands, do nothing. Above support, sit on your hands, do nothing. But guys, areas don't always hold. Sometimes they break. So we're going to count triggers to know when our advantage is back in play. I'm going to make this kind of big. If price reaches resistance and all of my triggers are below, in the moment, I have to stop. I have to say no more longs. I'm going to believe with all of my heart that this area will hold and stop the market no matter what happens next. In that moment, I couldn't care less about long trades. If two of my trigger lines, both small, get above that area, this area now has the potential to break. 2 triggers through is an iffy breakout, guys. 2 triggers through says, yeah, if the momentum is super strong, maybe this area breaks, but my advantage of a clear path is not present. I'm going to have to lean on momentum and I'm going to have to lean on a really solid entry area. When 3 triggers, 2 smalls and a large get above, now we're starting to get towards that good breakout. Now Fibonacci resistance is more likely to break. Once 4 triggers, both small and both large, get above areas of resistance, resistance is now support, and the path is deemed clear until you reach the next area. So if we're looking at the live market, and we're going to go on the large chart, price reaches Fibonacci resistance, 1, 2 triggers, large and small, 4 triggers total, stay below the area. I'm not looking for a long trade. My small triggers break above, the potential is there, but 2 triggers are still below. This is an iffy breakout at best, and sure enough, the area does not break. When we talk about entry rules, you'll see how this is an avoidable loss. Is everybody good with that? All we're going to do is count triggers. Price reaches Fibonacci support. 4 triggers above, guys, I don't care what your opinion is. I don't care what the voices in your head say. This is an area that is more likely to break, or more likely to hold, than it is to break. Rule number 2 is designed because John Novak took 10,000 pictures, guys. And in 10,000 pictures of price reaching area and the trigger's not breaking, more often than not, it's stopped the market. Trading into areas is one of the biggest rules broken and one of the biggest drainers of accounts, guys. So it means that you've got to be a little patient sometimes, that you've got to be willing to sit on your hands and do nothing. The futures markets trade billions every day. You don't have to be in every move. Wait and be in the best move. So that's momentum and that's path, guys. And these two things will set you free. Once you understand momentum, once you get good at counting triggers, it opens the door to find a lot more trades. It opens the door to see more opportunities, to recognize more patterns. So I encourage you guys, focus on these two, get good at them. And then we're going to go define an entry. Your entry rules say that you're going to use a limit order to buy or sell a pullback at an area inside of triggers, guys. That's a mouthful. I know that it is. Your entry is because of the large chart advantages. When you have strong triggers on the large chart, when you have a clear path or at least the potential to break on a large chart, you'll turn your attention to the smaller chart. Inside of that one bar on the large chart is everything you see over here on the small chart. It's the small crowd fighting. We're going to pinpoint where their fight is most likely to lose. That area happens to be, where the market is most likely to bounce. I am struggling here. And continue with the direction of the momentum and the potential to break. So for you entry users, for you guys working on accuracy, I'm going to go to the live market to do this, and then I'm going to share this picture with you. So the rules say that we're going to buy or sell a pullback at an area inside of triggers, guys. So when the large chart says down, when the large chart has the potential to break, I want you to see just the relationship of the triggers on the chart. Your 5-1 has large triggers. That's the smooth ones right here. And these are a moving average, and they're a slower moving average. And guys, one of the things that happens all the time is price returns to large triggers. Now I want you to see what happens if I put a circle on my large chart large triggers. Because price could return to my large chart large triggers as well. That's those synthetic triggers on your small chart. So in an effort to create accuracy, your small chart has both large triggers that are native to the 5-1. You'll use those to see that separation to define momentum, but it also has your large chart large triggers on there because your trigger lines will define where the retracement is most likely to go. Your trigger lines are what's going to help you with accuracy because price may return to the large chart large triggers, price may return to the small chart large triggers. I never know which one it's going to be. My rules say I'm going to buy or sell an area inside of those triggers, guys, and the two work collectively. Somewhere from the top line of both triggers to the bottom line of both triggers, that's where the retracement is most likely to occur. When they're overlapping one on top of each other, We call these favorable large triggers. The tighter your large and synthetic are one on top of each other, the more accuracy you're going to have, guys. The least amount of risk you're going to have, because it's the least amount of space to put a fib, a midband, or a yellow 1-to-1 inside of those triggers. Does that make sense? Because I did get a picture sent to me about why are there two sets? How do I know which one it is? Guys, it could be either. It could be the large triggers. It could be the synthetic triggers. And I want you to see something here. The large chart says down. I've got two triggers through, two triggers above. I've got the potential to break. This reversal bar signals the beginning of the pullback. This is how we're going to define entries. Price may go to the small chart large triggers. Let's see if we can make this easier to read. Price may go to the small chart large triggers. Price may go to the large chart large triggers. I don't know which one it's going to be, but these trigger lines together define where the retracement is most likely to occur. Everybody with me so far? Your rules say, and guys, the language for the rules becomes just infinitely important. Sell a pullback. That's that retracement, that small crowd fight. Add an area. It can be fibs. It can be a midband. It can be yellow 1-to-1s. And that area needs to be inside of triggers. So we've created the box for the triggers. Do you guys see it? Somewhere from the top line to the bottom line. The market doesn't care if it's the large below the synthetic. The market doesn't care if it's the synthetic below the large. But my rules say that I need an area inside of those triggers. Ladies and gentlemen, I have one area inside of those triggers. I have a midband. Does everybody see that? I have 1 point inside of those triggers that's most likely to create a bounce. My job as a trend trader is to activate a limit order a tick or two below that lowest point of resistance. That becomes your entry for the trend trade. And sure enough, guys, it bounces right off of it and down it goes. So the trigger lines will define the retracement zone. The areas within the trigger lines will show you where your entry is coming from. You guys with me so far? Feeling pretty good about it? So for a long trade, let's find, I want this one. For a long trade, when the large chart rules are met, the reversal bar begins the pullback on the small chart. The reversal bar is not your entry. The reversal bar is starting to lose a little bit of momentum, which is exactly what we need to get to our entry point. When the reversal bar prints, and with a little bit of practice even before the reversal bar prints, you'll start looking at your large triggers and your synthetic triggers. And somewhere from the top line of the large to the bottom line, this is where the retracement's most likely to happen. This is where the small crowd's most likely to push. But trigger lines aren't entries. Entries come from areas inside of favorable large triggers, inside of triggers. So somewhere from this highest point of support, the midband, to the lowest point of support, these yellow 1-to-1s, that blue shaded box, ladies and gentlemen, is where the market is most likely to continue, where it's most likely to bounce and go in the direction of the large chart advantages. Because of the momentum on the large chart, because of the clear path on the large chart, nothing in the way to create a bounce, your limit order goes a tick or two above the highest point of support, and you'll literally buy the market as it's coming down to you. Are you guys with me on entry? Guys, the accuracy of entry allows you to reduce risk, because what you're doing inadvertently, and Ollie, I'll get your question, I promise. What you're doing is you are defining where the market is most likely to continue. Through that definition, what you've also done, and this is why we can take so much smaller losses, is you have defined where the market should not go. If the advantage of rule number 3 lets me know exactly where the market may retrace, lets me know precisely where it may bounce, anything below the triggers, below that retracement zone, anything below the areas inside of those triggers most likely to create the bounce, well, guys, this is where the market should not go. This is where the advantage of rule number 3 is no longer in play. This is where initial stops are placed, about 4 or 5 ticks below the triggers. Or if it were a short trade, dun, 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 about 4 or 5 ticks above the trigger lines. And that's exactly where the market shouldn't go. Does that make sense, everybody? John, does that answer why the area may be inside of one of the triggers, but not necessarily both? That was one of the great questions I got yesterday. Triggers define the retracement. Areas define the bounce, guys. And you can go study this, and I think this may be the picture. Do you see these tails on the large chart? These tails are these pullbacks. You are pinpointing where the bottom of that tail is most likely to form by using the areas inside of favorable large triggers. So if I go back on a large chart, and watch this, if I circle the tail, the first hit is an area inside of favorable large triggers, and it goes down. The second hit, ladies and gentlemen, do you see this cyan line printing off that pivot? And there's another one printing as well. That's called divergence. And divergence is a loss of momentum. And I'm not sure what the market did, but I'm going to show you something pretty cool. I hope that you enjoy this as much as I enjoy teaching it. Let me find my cheat sheet. Because every time I look at a trade, every time I look at a market, my job is to ask myself about the momentum, the path, and the entry. So, the momentum, does everybody see the separation between the small and large? The space is there, the triggers are down, the colors match. Guys, momentum is awesome in this picture. But when I go to my path, I have 2 triggers below the area. I have 2 triggers above the area. And the area that we're talking about is this divergence low. This is a horizontal line on a large chart. It could stop the market. It could create a problem. It could create a bounce. So guys, with only 2 triggers through and 2 triggers not through, my path is not clear. It is only potential. And because it's only potential, I've got to lean on momentum, and I've got to make sure I have a low risk area. So the first pullback to the area inside of favorable large triggers is a beautiful looking trade, guys. The potential to break, there's no divergence, which means that there's no slowdown, and it bounces right off of that midband. Well, on the second push up, I've got a loss of momentum in the form of divergence. Divergence is a loss of momentum, guys. So I just lost mom. And I'm hoping that intum breaks the area. And intum's not even a word, right? And then again, a second loss of momentum, a second divergence. And guys, my first advantage is nothing more than I sure hope the area stops the market. Divergence is one of the biggest killers when you only have the potential to break. What did the market do? It's still doing, isn't it? And now 3 divergences in the same price range. Gads and little fishes. Let me teach you something about 3 divergences in the same price range. I love how this lesson just falls into our lap. There is one termination condition on a small chart, ladies and gentlemen. One time on a small chart where I will say there is no way I'm taking that next entry, because 3 divergences in the same price range may terminate the trend. 3 divergences with weak triggers is more likely to terminate the trend. 3 divergences when the final divergence is higher than the previous from a low, or lower than the previous from a high, is even more likely to reverse that market. So what we have live market, and this is pretty cool, only the potential. It's getting bad. It's getting worse. I can't think of a good reason to look for a short. Does that make sense, everybody? And what you're seeing on the small chart is change that you can't recognize on the large chart. This is your refinement process, guys. And every one of these bars is sitting inside of this one bar. Guys, that is your high probability trend trade. Ollie, should we not be worried about the divergence on the large chart because of a potential stop out, referring to the crude oil? So, Ollie, that's an awesome question. Hell yes, you should be worried about this. Why? Because it's a horizontal line and there's only 2 triggers through. Ollie, do you recognize how this is only the potential to break? Absolutely. I want to be aware of that area. And at 65.19, if I took this short trade without divergence, that's my trouble spot right there. And Ollie, look at what happened right at the trouble spot. And look at what happened a second time at the trouble spot. And looked at what happened the third time on the trouble spot. And God bless this large chart. You knew about it before it ever happened. Guys, it's like having a magic 8-ball. It's like having a crystal ball, tarot cards, whatever you're into to predict the future. The large chart says momentum and potential to break, and the small chart said, you know what? Probably not happening, large chart. Sit on your hands, wait for a better opportunity. Ollie, did that answer your question? And they're still trying to push up. I love it. Jerry says, if you have multiple points, fib, midband, 1-to-1s, enter in the 5-1 chart. If the smaller chart is below the large triggers, take the first point. If it is inside the large triggers, take the second point. If it goes past the large triggers, take the third point. So Jerry, you're saying, and let me just make sure that I understand this. You're saying that if the market gets below the triggers, where it shouldn't go, where my advantage is gone, you should still enter the market? Is that right? Okay. So, hold on. So you're saying, let me get this straight. The language for entry, and Jerry, it's very, very specific. Areas inside of triggers. Do you see how these are below the triggers? That's your entry, right, Jerry? What this says to me is I'm on the wrong side of all my advantages. And if I'm on the wrong side of all my advantages, rule number 3 is not met. And if rule number 3 is not met, there is no way I'm jumping into that market, Jerry. This is where the market should not go. This is where my stop belongs. Does that make sense? This is an avoidable loss. And guys, this is a very common loss. Let's see if we can find another example of it. I do love examples. Let's back up, back up, back up. So let's just say hypothetically you chose to trade into a termination condition. Once you get to the wrong side of those triggers, guys, it's game over. It's done. That's why we use the triggers. There's your accuracy part. Jerry, does that make sense? All right, so I want you to do me a favor, Jerry. I want you to show me a picture. For those of you that are just meeting me, I'm as artsy-fartsy as they come. And I'll do my best to visualize what you're saying, but Jerry, I don't think I'm there, man. Find me a picture. Talking about the small trigger position in relation to the favorable large triggers. All right. Okay, I think I'm getting you. So let's do this. Bum, 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 bum. We're going to use this one. And this is a good reminder. And guys, just a heads up, Jerry's got way more experience than most of us in this room. He's had the software for a long time. Can you guys give me a Y if you can see that the momentum is outstanding on the large chart, that the large chart has separation, that the push is there, that the market is likely to continue up, that my first advantage is solid, right? This is rule 1 met. Now I want you to, and Jerry, thank you for humoring me. I know that you're in a different spot than a lot of people. Guys, all 4 triggers got above that area, we're going to say. So we have a clear path. Jerry, there's a lot of variables there. I'm going to cover both. Rule number 1 is met. Ladies and gentlemen, can you give me a yes? I have, whoop. Dope. I have momentum, and I have a clear path, and the large chart has said, Mark, you have 32 flavors of awesome work in here. Go look for an entry. Some of us will say, and when I say some of us will say, guys, what I'm saying is that when I was learning the indicators, this is what I did. Here's how I fixed it. So some people will say, but Mark, there's a termination condition on your small chart. Has anybody done this? Oh my gosh, there's one-to-ones. I can't take that trade. I've done it 100 times. And this is where I have to remind you that our clear path has already been defined by a large chart that's going to be hard to stop. And some people will say, the small triggers have turned against me. I'm losing momentum. To which I lovingly reply, but your momentum was defined on a large chart and it's going to be hard to stop. And guys, what you have to learn, and one of the things that you're going to realize is that when the large chart is giving you what you need, when the large chart says momentum, when the large chart has the path that you're looking for, I wish I hadn't closed this out. There is one instance on a smaller, faster chart, only one, when I have momentum and path that will keep me out of that trade. And that one condition, ladies and gentlemen, is 3 divergences in the same price range. So that's a good lesson. And now I'm going to address Jerry's question about, well, which area do I pick, Mark? So let's do this, Jerry. You're going to dig this. And man, I can't tell you how much I appreciate the questions, because the questions build great, great lessons. All right, and we'll use this one because this one has a pretty good range between the mid-band and the one-to-ones. So let me show you the large chart. And I'm going to take the best picture I can find. This is the rules being met on the large chart. This is momentum, and this is path. Is everybody with me on this one? So we're assuming that this entry is for a high probability trend trade. Because of the large chart advantages, because it's a market where the odds are favorable to push up, because there's nothing in the way on the large chart to create a bounce, Jerry, the answer to your question is I'm getting in at the highest point of support inside of those triggers, or I'm getting in at the lowest point of resistance inside of those triggers. Whichever bar is closest to that, or whichever area is closest to that reversal bar, that's my choice. Because I don't want to miss this trade. With a large chart screaming in that direction, I will always enter at this trade. This is the perfect trade. Does that make sense, Jerry? So there's our first answer. Now what happens, Jerry, if there's a fib right here? And this is only the potential to break, right? I don't have a clear path. We'll make that red so that we can all be make-believe together. So this is resistance. So now I've only got the potential to break, right, Jerry? And you're saying to yourself, I've got a well-defined entry. Life is good. Everything is great. And Jerry, your risk goes where the market should not. Always. Whether it is high probability trend trade, whether it is medium probability trend trade. You say take it. No, it has nothing to do with that trigger line. Nothing to do with that trigger line. Jerry, you're going to talk yourself out of stuff if you're letting that tiny little 5-1 trigger line influence your decision. Your large chart is 175 tons of pressure up, right? And your large chart has nothing in the way to create a bounce. How much of a fight do you really expect that small crowd to be able to put up against this sort of momentum, against this sort of pressure up, against trend and direction and everything, right? We assume that these guys suck and they're not going to get low. And Jerry, what you're doing, and I see what you're saying. If the small triggers start coming up, it's going to go higher, right? Well, divergence is a good indication. Here, the small triggers were above the large triggers, and it didn't push as high, right? So it's hard to say. There it is. You see the smalls above the large, Jerry? And this push wasn't as high as this push. So you can add factors, you can add rules, you can create scenarios that you would like, but I think that one right there, and I could probably go find a lot more examples, you might be adding things that aren't necessarily factual. Let's look at this one. Momentum and the potential to break. Bum, 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 bum. Scrolling, scrolling, scrolling. Small triggers are up. They're working above the large. They're in the large, but it's still the lowest area that creates the bounce. And it's because of this momentum on the large chart. It's hard to fight that momentum. We don't expect the small crowd to get a lot of work done. If they do, if they surprise us, we know exactly where to put our stop. Now let's give a scenario here, guys, and this is just a little entry lesson. If I say this is not my perfect look, one of the things you can do, and it's your right, is you can say, I will only get in at the highest point to reduce risk. And I see people do that. When it's not the perfect trade, I've seen people put their limit order up above, right? I've got a divergence. My small triggers are against me. But guys, the momentum is overwhelming. And when you put your entries above the one most likely to give the bounce, you run the risk of missing the move. And is it worth 5 or 6 ticks difference to miss a move with that much momentum coming from a strong top? There's a million ways to skin a cat, and that's a horrible phrase. There's a million ways to do it, guys. I give you the best of the best at first, and then Jerry, just like Jerry's doing, guys, you'll find a way. You will find a way that suits you, that makes you happy, that gives you warm fuzzies, right? But until you find your own way, there is a best way, guys. And the best way is the way that you can go back, that you can prove wins more than it loses, so that every time you enter the market, you have an edge. Jerry, did that answer your question without downplaying your analysis? Because everybody has their own way to do it. I hate missing trades. I hate knowing where the market is most likely to bounce. I hate recognizing these advantages and saying, you know what, I'm going to trip over a couple pennies, hoping to save a couple dollars. And that's exactly what you're doing when you don't take your entry at the highest point, at the lowest point. So it's up to you. Your plan is your plan. And only you can trade your plan. So guys, a trade is momentum, path, and entry. That's a high probability. All three, best of the best. Each indicator on every chart agrees with the rules for the trade. The majority of your trades will be what we call medium probability, where one, capital O-N-E, where one advantage goes away. You look at your chart, hold on. You look at your chart and you say out loud, I have momentum, I don't have a clear path, but I can define an entry. It's a medium probability trade. It's no longer high probability. You can't put the pressure on it to win typically 70 to 80% of the time. Once 2 of the 3 advantages go away, something in the back of your brain has got to be screaming, no, don't do it. It sucks. It's low probability. Why are you giving your money away? And guys, low probability trades will win every now and then to try to sucker you in. And high probability trades will lose every now and then. to make you believe that you need to change your plan, which is why trades are based on hundreds of pictures. It's a sample, it's not an individual. You're in control of the entry, guys. When you teach yourself to talk about what's working for you and against you, it helps you make decisions on whether or not you want to enter that trade. Guys, when I have all three, I can't wait to enter the trade. I'm excited to enter the trade, and I couldn't care less about the result because I know it's going to win more than it loses. Once the variables change and I go medium probability, I have to make a choice on whether or not I'm willing to risk my money on a trade that isn't the perfect trade. And if I do, I probably need to manage it a little more aggressively. I need to take quicker profits, and I have to be willing to get to break even. When two are gone and I choose to enter that trade, guys, that's your Hail Mary. And this is where your brain is going to use ridiculous stops and unrealistic targets because you already know it sucks. And you're like, well, if it sucks anyway, I might as well hope. My brain working that way. So every chart posted in the room, guys, we're going to go back to those three concepts. Do I have momentum? Just got below. Do I have a clear path? Not even close. Only one line through support. And guys, look at what's happening. Avoidable losses. And if you're one of those people that said, well, I'm going to go short anyway because there's not divergence, you just got your ass kicked. Or you say one of those people that says, I better get it at the mid band because my small triggers are up, you lost because of the large chart termination. Let it be easy. Let it be simple. Guys, when price reached Fibonacci resistance here, was Fibonacci resistance more likely to hold and continue down, or was it more likely to break? What do you think? This one had the potential to break. This one had no freaking chance. Large triggers never even rolled. Smalls never even got above. Some of you, because of these three divergences, said, hey, it may push higher. And then when everything rolls in your favor, you might have looked for an opportunity to continue down based on your understanding of termination conditions. Are we good, guys? That's Ninja Trader 101. And I wanted to go a little bit deeper into it today. I know I've got some new people on Ninja Trader. Everything is momentum, path, and entry, guys. Momentum and path lead the way. Momentum and path is the good stuff. Let's back up. Oh my gosh, I love fibs, guys. Price reaches support. None of the triggers break. Look at the bounce. Price reaches resistance. Only two get above. Look at the retracement. Price gets to support in a divergence low. Only two triggers. Giant untradeable retracement. It tries to push back down. Can't get through. No momentum. Big retracement. Right to yellow 1-to-1s with all the triggers down. Straight to the divergence low. Guys, you knew about every one of these areas. You could choose not to trade into them. And then it turns. And it's cruising up, and two, right? And two. And maybe you said, you know what? Because that termination condition reversed the market, because I've got the best momentum, two triggers are above the divergence high, and I haven't reached Fibonacci resistance, maybe I'll take that pullback to the area inside of triggers. Maybe I'll see if that momentum gets me up to resistance. And guys, it did. And right at resistance, three divergences, and I'll be damned. What an easy avoidable loser. Straight to support, no triggers through. Straight to resistance, no triggers through. Back to support, no triggers through. Guys, rule number 2 is defining your range. It's showing you an area of consolidation and chop that you don't have to be a part of. It's a roadmap. And guys, when it's good, it's great. And when it's not right, it's okay to do nothing. 95% of your day is just reading indicators. All right, so now we're going to go to TradingView. Is everybody good? Ninja Trader users, if you have a question, ask. I can't wait to talk about it. Now, TradingView is going to be a little bit different, guys. TradingView uses a different bar structure. Renko bars move fast, and these bars are based on ticks. Your TradingView is going to use minute bars. So I'm going to open up the plan real quick. Your large chart on TradingView, ladies and gentlemen, is a 15-minute chart. Inside of 15 minutes, guys, you might get, oh my gosh, let's see if we can do a 15-minute run over here. This is the large chart. So from midnight to 1:15 in the morning, I've got 4 or 5 bars. This will be 1 bar. Hey, Miss Linda, have a great day. Thank you for coming in here. Inside of a 15, 30-minute session over here, guys, you might get 5, 10, 20 bars, depending on the speed of the market. You're only going to get 1 bar on your trading view chart. This is your big chart, guys. This is your roadmap, and the large chart still leads the way. This is going to be your roadmap for key targets. This is going to be your roadmap for turning points and terminations, guys. And the trigger lines on this chart are going to define direction and momentum the same way they do on NinjaTrader. Both trigger lines in the same direction is always best, guys. It's no different than NinjaTrader. Momentum is momentum is momentum. Separation between the small and large is always momentum. Separation between the small and large is always momentum. There's a little difference, though. Because it's such a slow chart, because it's such a slow forming, slow to give information chart, you can see that I have strong triggers down the whole way. Can you give me a Y, TradingView users? These are strong triggers, separation between the small and large. The odds are favorable for the market to continue down. 15-minute bars take longer to give you what you need. So I'm also going, do I have a PDF, Jose? First of all, Jose G33, it's nice to see you in here, man. Been a while. Great to have you. There you go, brother. There's the PDF version. When we're looking at a 15-minute chart, guys, I'm not only going to look at the overall. The overall is strong triggers down. This is a market that's likely to continue down. There's 3 positions where price is going to be in relation to the small triggers. So the small triggers are down, guys. The small triggers are down. They're down strong. The only direction I'm looking is down. But I'm going to make a decision on how aggressive I'm going to manage. So when price is to the left side of triggers, this is the strong side. This is the best of the best, guys. And this is where I'm taking momentum style trades on a smaller chart. This is where maybe I'm holding for bigger moves. Once price moves inside of the triggers, this is a transition. And this transition says you should only be thinking shorts, but make sure that you're not fighting anything on a smaller, faster chart. Make sure that you're not going against the small chart momentum, that you're not fighting the small chart triggers. Once I get to the weak side, it's still shorts, but my management game gets stronger because I'm no longer on the strong side. And then sure enough, it pushes down. I'm strong again, can't wait to go short. Here's my transition. Here's my weak side. And then what happens on that big chart is from the weak side, they're going to have to make a decision. Are they going to roll and having me look for shorts, right? Once I get to the weak side, are they going to roll? And if they roll, what did they do? They put me on the strong side of the smalls. My large are still down, but when I'm on the strong side of these smalls, guys, I can look for opportunities. I have to make sure I'm not trading into areas. So your large chart 15-minute trigger read, momentum is always momentum, guys. This is the best. But where is price in relation to those small triggers? Does that make sense? I ask if that makes sense a lot, and nobody ever goes, no, Mark, I'm totally lost. If you're totally lost, send me a message, and then what I'll do is I'll make sure that you get the lesson that you need. The 1-minute chart defines the immediate strength. So how do I find a way to capitalize on what the 15-minute chart is telling me? You're going to look to buy pullbacks at a zone that is broken if you're using the zones. You're going to look to buy pullbacks at 1-to-1s. You're going to look to buy pullbacks to HVAs. And when I say looking to buy a pullback, when everything is screaming down, Not a good example because that is a straight line run. When everything is screaming down and an area breaks. So when I say buy a pullback, I'm going to show you exactly what I mean. And this is probably the most popular trade. When price gets below a zone and I have these strong triggers, guys, I'm going to sell that zone. And I can actually define where the market shouldn't go 3 or 4 ticks above that zone. But the key is I have to let it break and then pull back. And that's my look for the momentum trade, guys. And that's the look where I'm going to capitalize from being on the strong side of those triggers. Because when I'm on the strong side, when I have odds favorable, guys, that's when those momentum trades are their absolute best. Taken from those HVA lines, taking from zones, taken from yellow 1-to-1s, pink 1-to-1s. When I don't have strong triggers, well, then it kind of pops me into a trend trade scenario, guys. The large chart still says down and there's nothing in the way, but maybe I'm in a transition, maybe I'm on a weak side. Maybe my small chart triggers, let me show you what it looks like because I know there was a trend trade earlier. Oh my gosh, there's so much information on this chart when it's busy. Maybe, even though my large chart says up and my large chart says that we're going north and I'm on the strong, and everything is up and I'm above the areas and I have strong triggers, but my small chart isn't giving me anything for a momentum trade, guys. Once these triggers roll, and let me know if you see it. This is TradingView. Once these triggers roll, I'm expecting a deeper retracement. So if my momentum trade long is off of the chart, my next trade is a mid-band. A mid-band, this says up, this says strong, this has nothing in the way. Because my immediate strength is down, my next trade is a close on the correct side of the small triggers at a mid-band. This is your trend trade, ladies and gentlemen. So you're going to see momentum trades. Everything says up and strong. Let's see if we can find it over here. Break the HVA, pull back to the HVA. You're going long right at the HVA. Continuation to trouble. We hit trouble. Everything still says up, but the small chart says down. We're going to relax and wait for the long trade. Does that make sense? So it's always, and with this big spike, guys, it's kind of hard to see, but let me make it big. My small triggers are down. My large triggers are down. There's space between. That is strong triggers. Can you give me a Y, TradingView people, if you're with me? That is strong triggers. And then my second question is, where is price in relation to those strong triggers? Well, it's pretty cool. Let's get an arrow real quick. If I just extend the strong triggers in my brain, is price left, inside, or right? So give me a Y if you see that price is in fact trading on the strong side of these triggers. That's my first read always. Where am I in relation to those small triggers? And now once I'm on the strong side, the triggers are down and life is good, is anything in the way to mess up my trade? Well, we're trading right at a zone. Boom, boom, boom. They are way down here, right? We're trading right at a zone on my small chart, and my small triggers are now pointing up. Do you guys see that? What does that say to me? That says, even though the large chart is screaming down, my small chart is struggling. My small chart is changing a little bit, and because of this change, if I did enter at the zone, this is my management opportunity. If everything rolls, my next trade will be a trend trade somewhere up here. Momentum, when everything is perfect, when the smalls are below the large. Once it begins to weaken, guys, there's got to be a point where you just say, okay, not my trade. Let's get these off of here. And let's do the same read. Let's go to gold, or this is crude oil. So the first read is, what direction is everything going? Does everybody see that everything is going down? That's an important lesson. This lets me know which direction I'm trading. My small triggers are down. They're below the large triggers. Everything is strong. Where is price? Guys, price is still trading the strong side, but if it comes up higher, we'll weaken. But right now, I'm strong. Small's below the large, but now I'm weak, and I'm directly into a zone. Do you guys see the zone here? The outer band? This is my pause button, guys. I didn't break it and pull back. I tried to break it. These tails are very telling. It may go down, but this isn't my best look. My best look is when it breaks it decidedly and then pulls back. When it breaks it, well, and that might have been a failed momentum trade right there. Strong triggers, breaks, pulls back, tiny little loss when it doesn't go. And I'm looking to see if we can find another good look at a momentum trade. There's a pretty good example. Strong triggers. Where did this happen? 8:25 a.m. Strong side of the smalls. Break the area, pull back with strength, continue up. Does that make sense, guys? This is something that you're going to have to study. Hit the zone. Smalls rolled. I'm on the strong side of the small triggers down from the zone, but I'm bouncing right off of an area. There may have been an opportunity in there. Day trading is a big rinse and repeat, guys. It's a big rinse and repeat. What do I see? Weakness, right at a divergence low. Guys, I don't have momentum or path. And then here, more weakness at a divergence low. And I didn't have momentum or path. And let's go, where are we at now? It's 10:07. That was a big push down. There was weakness, but I did have a clear path. Let's go look at 9:54. No areas inside of triggers. Ninja Trader people, do you see it? I gave up momentum, but I did have a clear path, but I didn't have an area inside of triggers. Oh my gosh, can everything really go back to three concepts? And this is where we're talking about for you guys that are new. This bar right here is that retracement right here. Smalls are inside of the large. Ladies and gentlemen, I am void of momentum. All of my triggers are below the fib. I absolutely had a clear path. My area is not inside of the retracement zone. I do not have a well-defined entry. And once I get to the wrong side of the triggers, ladies and gentlemen, I don't know if, when, or where that market's going to stop. Learn these three concepts. You'll be floored at how emotionless trading becomes. Two triggers tried to peek through. There's divergence with only potential. Didn't work. Odds favorable. Clear path. Right to the midband, the highest point inside of triggers. Did anybody catch this one? I've got momentum. All my triggers are above the fib. Price has not reached the fib. Pull back to the midband inside of the retracement zone. Fits the rules, doesn't it? Beautiful trade, Jen. If you're brand new, you may not have caught that. You may have overthought it. Where's my retracement zone? What if it goes here? What if it goes up there, right? There's a lot of risk on that trade, but it was momentum and path. Highest points, what the rules say if I'm brand new. Guys, I'll learn how to change my plan eventually. But until you're capable, until you have the reps to do it, I'm going to give you this plan. This is called the KISS plan. And the KISS plan is designed to optimize your chances of success, guys. And it'll be through simulation, study, class feedback, continuous practice. You're going to grow. The better you get at reading your charts, guys, the more you're going to see. The better you get at recognizing momentum and path, the more opportunities you're going to find in the market. Until you get to that point, guys, why not follow a plan that's been proven to win more than it loses? So there's two things you need to know before you sit down to trade and you're not on simulator. And guys, this is whether you are TradingView or whether you are NinjaTrader. You have to know why you will enter. And that answer should be because your rules are met, because your rules describe a pattern that has been proven to win more than it loses. Guys, your rules have nothing to do with the money you can make. Your rules have nothing to do with influencing your friends, the rent you need to pay, the car payment that's due, or the tuition that needs to be paid. Your entries come from rules being met, which means that you got to focus on your rules. And more importantly, you've got to prove that your rules win more than they lose, because that's your edge. That's what we just talked about. Why will I exit? This is the hard one. Well, because I hit my targets. That's always my favorite reason. But also because my advantages have gone away. So when I say because my advantages have gone away, let's see if I have a picture for it. Here we go. Because my momentum is no more might be a good reason. Because I get to the wrong side of the triggers may be a good reason. Because there were 3 divergences in the same price range. My edge is no longer present. I'm just going to exit the trade and I'm going to wait for the next trade. Define your entry. Use a checklist, guys. If I have a termination that reverses the market, then I'll look for strong triggers. And guys, a strong top or bottom isn't mandatory, but it does increase the likelihood of success. And this plan is designed to optimize your chances of success. If I have strong triggers, then I'll make sure there's no termination conditions. If there are no termination conditions, then I will enter at an area inside of triggers. And guys, this is the recipe for a trade that typically wins 70 to 80% of the time. The entry is mechanical. It's very if-then. Your job is to learn what each if looks like. What do strong triggers look like? What do no terminations look like? What does your entry look like? Once you learn this, you've got the recipe. And then you have to manage it, guys. And management in the KISS plan is based on 2 contracts, because 2 contracts give you the ability to get paid, and then it also gives you the ability to learn how to trust the large chart. So the management in the KISS plan is very if-then as well. And guys, every management plan is unique to the type of trade that you're taking. The management plan for the highest probability trend trade says, if my entry is at an area inside of triggers, then my stop goes 4 to 5 ticks above the triggers, because that's where the market should not go. Targets are predetermined at 100 and 200. If I get stopped out, guess what? It's a cost of doing business. It happens. If I don't get stopped out, it means I got a reversal bar in the direction of my trade. I will redefine where the market should not go 2 ticks above that reversal bar, because now everything is going my way. Doesn't guarantee a win. I still might get stopped out, but it's a tiny little stop out. If it doesn't stop me out, it goes to my first target. And once I hit $100, $100 is in my bank. Get paid. You got to learn to get paid. Go break even. Nothing bad can happen. Learn to trust the large chart for the second target. And if it hits your second target, ladies and gentlemen, that's a $300 trade. That management is right here on this spreadsheet. This spreadsheet, guys, is designed to create recognition through repetition. This is the NinjaTrader spreadsheet. Defining strong triggers, clear path at an entry area, pictures for you to study. Defining weak triggers and termination conditions, knowing when you have to not take the trade because your advantage is gone. Over 500 pictures of client trades in the green section. That management plan is right up here. There's a place to build your plan and a place to track your trades. Here is the same one dropping in the room for that trading view. As you learn these looks, there's your HVA trade, there's your trend trade, there's your momentum trade, ideas on management, and reasons not to take the next trade. So all of this is here, and it's all based on the idea that recognition creates repetition, ladies and gentlemen. And this is the longest that I've spent. We've done some large chart reads. There hasn't been any rules met to simulate and trade. Guys, in the room, I will pull the trigger on simulator if the rules from the KISS plan are met. No worries, John. Did you get your questions answered? Oh, can I show you one thing before you split? Do you have 2 seconds? Don't ever try to line up the two charts based on timestamps, guys. These are two different charts moving at two different speeds, creating two different bars. If you're trying to get the look, grab an ellipse or a rectangle, and let's just say I wanted to see what happened on the small chart right here. I'll put my square here, and I'll scroll back and I'll see what it looked like on my small chart. And you can see that that says 9:59. This is up around 10 a.m. So John, that's the way to bypass that problem of not being able to line the two up. Just use a drawing tool and make sure it prints to both charts. Go have a great day, man. Thanks for your questions, and thanks for asking for the entry lesson. I think you helped a lot of people with that. And I just gave up that it was you that asked. My bad. My bad. So guys, I will pull the trigger in the room if the rules are met for the KISS plan. If they're not, I'm not going to do it. Why would I risk taking low probability trades in front of a group of strangers, right? I have momentum. I have 3 triggers through. I have, oh my goodness, look at that. Pull back to an area inside of triggers. No divergence. If you're taking this trade, you're trading the potential to break this Fibonacci area. Doesn't guarantee. As my small triggers weaken, I'm losing momentum a little bit. Stops where the market should not go. It's a medium probability trade. That's all it is. And we'll see what happens with it. Small triggers got above the area up here, guys, so that is not a strong top. Strong top or bottom really is the precursor to the best of the best when you're looking for these potentials to break. That's what the KISS plan says. So I'm going to take a couple minutes, guys. I'm going to stretch my legs. When I come back, I'm going to start looking at the charts that you guys posted. The one thing that I request of you guys, and I know it's work and what a pain in the butt Mark is, every time you post in this room, this is an educational room. This is an educational room for everybody in the room. And we're all at different points and we all need different things. What I need from you is I need you to annotate your charts. I need you to tell me how you're reading your charts. Define the momentum that you see. Define the path. Is it a termination? Is it the potential to break? Or is it a clear path? Hey, good morning, Miss Cindy. And define your entry. I want you to write on there, I entered here because it was green. Okay, that's fine. We'll talk about it. We'll look at it. We'll see if we can do it better. I entered at the area inside of triggers. Outstanding. Following rules. That's wonderful. If you tell me what you did and what you saw, what I can do is make sure that you're reading your indicators properly. I can make sure that you're identifying momentum properly, that you're not trading in determinations and you understand. Or even if you say, I took this trade and I know there was a termination condition, but I did it anyway because. Guys, what you're doing is you're writing a recipe for long-term success. You're making it so that you can do the same thing every time. And the best traders I've ever worked with have 1 or 2 trades, 1 or 2 patterns, and they know exactly how they're going to enter and they know exactly how they're going to manage. So when you annotate your charts, you're writing a recipe for success. And if you annotate your charts, you're also identifying challenges that you may not have seen in the moment because we get excited in the moment. I'm going to take a trade, I'm going to take a trade. And then you come back and look at it, you're like, son of a gun. I had weak triggers directly into a fib. I was so excited about the short, I completely missed that. And guys, this will let you know what you're working on the next trade. So when you post in the room, guys, do me that favor. Identify what you see. Mark, I saw momentum. I saw the potential to break. Because I didn't have divergence, I entered at the area inside of triggers. My stop was up here. I put it behind the reversal bar. and it got me, but I re-entered because of the advantages. If divergence prints, I'll exit the trade. That's what we're doing each and every time. Mark, I saw the smalls breaking above the large, and I recognized that we just didn't have a clear path yet. I decided to enter at the area on the wrong side of the triggers, even though I have a termination condition. I made that choice. That's my right. And guys, I'm going to say, win or lose, I'm going to say, man, you're giving up a lot of advantages. You may have gotten lucky here. Luck feels good in the moment, guys. Dopamine is a very real drug. It feels awesome. But short-term victories very often lead to long-term failures. And let me show you what I mean. If you chose to trade into this termination condition here and got away with one, you're more likely to do it here where you didn't, or here where you didn't, or here, or here, or here, or here, oh my gosh, or here, or here, or here, or here, or here, right? So the one time it breaks makes you think you need to change your plan. But the one time it breaks is the one-off, is the anomaly. It's not the rule. So I'm going to go stretch my legs real quick, guys. When I come back, we're just going to start clicking on charts. We're going to talk about them. Remember, if you have questions about any chart posted in this room, please, please, please ask. Otherwise, I'll be back in just a couple minutes, and Miss Jen will get started with you. Let's get going. So what's my current read? Strong triggers, only 2 triggers through. Guys, there is that divergence on a trade that's only the potential to break. It may work. We'll see. My smalls are below my large, though. This is not my best look. It may go, but my rules aren't met. Still trying to break the area. If you entered, you've got your management hat on. Look at that, guys. There was your zone. You saw it on the small chart. And sure enough, now we're in a transition. The smalls are down. The large are down. We're in the transition side. There are no long trades yet. We're waiting to see what they want to do here. We are strong side into a zone. Sure enough, that pushes the market up. We're just waiting to see what they want to do, guys. Price is trading below the zone a little bit. Strong triggers down. Whoops. We hit the area. Transition. Weak side of the small triggers. Do you guys see that? There's your area. 45. Where's the market? There it is. Area hit. There's your transition. Got to the weak side of small triggers down. And guys, that market's pushing up a little bit. I've got 1-to-1s right here at 65.12. Right at a mid-band. No clear path. Wrong side of the triggers. That's my read. Guys, it's difficult sometimes for you, I know, because you're like, Mark just went to 5 different charts and didn't call a trade, didn't say the rules were met. And guys, welcome to day trading. You might spend an hour in front of your charts and never get a trade. Weak top, odds favorable momentum. Guys, this is the Nexgen momentum trade with the potential to break. With strong triggers, let your small triggers in price break through a fib. When it snaps back, sell the fib. This is the momentum trade. Nexgen's been teaching this one for 20 years. For 20 years. And with this much momentum, Jen rides it all the way down, gets out with a loss of momentum. Beautiful trading. Ron, I like that. Some days it's all day trading. It is. And some days it's like an ATM. Some days you just can't even react fast enough. There's so many opportunities. All right, Chariot. Strong top, termination that reverses the market. Termination, it reverses the market. So one thing I want you to think about, Chariot, guys, this is going to be a great strong top lesson. Are you with me in here, Chariot? I love this chart. I love this chart. Weak triggers? Absolutely. Strong triggers, odds favorable momentum? Absolutely. High probability trend trade? Can't be, because the path isn't clear. Medium probability trade with momentum, with the potential to break. Medium probability trend. Well, this one right here. See how all of your trigger lines are below resistance, Chariot? That tail doesn't qualify, right? Because I do have momentum, but I don't have a clear path. So I just have to refrain from calling it high probability. And what I'll do is I'll say to myself, all right, one of these is missing. It's medium probability. Let me manage a little more assertively. It doesn't necessarily mean don't take the trade. It just means know what you're up against. I don't have a clear path. If it's perfect, I'll take a shot. I don't have a clear path. If it's perfect, I'll take a shot. That's all. So great chart reads. The only ones I want to give you a lesson on, and this will be for everybody. When we talk about a strong top or a strong bottom, one of the rules, and let me write the language for it. A strong top or bottom is a no triggers through, and this is real important. No triggers through the area termination. So what that means is that potential to break is not a strong top or trop. So right here, let me get rid of all that. Right here, price reaches resistance, yellow 1-to-1s, no triggers break. When it reverses, strong top. Is everybody with me? Strong top is the precursor to the highest probability trend trades you could take. Strong top is the reason these potential to break trades were more effective. Now here, I had the potential to break. And because I had the potential to break, because 2 triggers got through, I still didn't break, and I still get a reversal. But because the buyers were able to push up past that area and bring the moving average with them, I'm going to call this a weak top, which means that if I try to take this potential to break trade, it's less likely to work. Does that make sense, Chariot? Here, price reaches, no triggers break. Awesome. Here, price reaches, no triggers break. Now it's a strong bottom. And over here, we didn't make the area. So we didn't reach the divergence high. We had the potential to break the fib, so we have to say to ourselves, since it wasn't a termination condition at the high, it's going to be a weak top. Does that make sense? It never got to be a termination condition up here because price never reached it. It was the potential to break, but it didn't. So we're going to call that a weak top, and then the market screams down. Great chart reads, man, a great opportunity for just a little bit of feedback for a little bit of clarity. I'm a big fan of language. I really am. And I think that when you learn the language, a strong top or bottom is first a termination condition, always first, and then it reverses the market. And I'll drop that picture down in there. Good stuff. Good stuff. Let's see who's next. Miss Jen. Weak top, odds favorable momentum, 2 triggers through, no divergence, perfect entry, quick profits, out break even. Jen, great opportunity at a medium probability trade. You guys see how she talked herself through it? Strong triggers. Then she counts triggers to see what she thinks of 65.19, recognizes that there's no slowdown, has a willingness to take the entry. Guys, that is 4 contracts just below the mid-band. 2 of them off at 22. 2 of them off at break even. Nice job, Jim. Great management. And Miss Linda has left for the day, but we're going to see what she did. I love it. Back of the bar clears price with all the momentum. Back of the bar clears trouble with all the momentum. Jumps in, jumps out. Miss Linda, if you watch the video, outstanding. Steve Diego says, I can do it too. Odds favorable momentum. Everything is screaming down. He jumps in when price clears the back and holds it to trouble. Nicely done, Steve Diego. For those of you that aren't in the know, the Chili Dog is not a Nexgen trade. It was created by Ron C. I want to make sure he gets credit for this. And it's a trade that is based solely on momentum and path, guys. And one of the things that I try to really say in the beginning of class is that when you understand these two concepts, life gets pretty easy for you. You will find a way. And Ollie, you were worried about that divergence. And Ollie, do you see how you had Fibonacci support there as well? We're missing that synthetic over on your large chart, but divergence gave you the heads up as well. And we got the lesson on that, right? You're good. When it's potential, I have to be a little more focused on advantages. Great stuff, man. You guys are killing it today. Miss Jen, odds favorable momentum, clear path, pull back to the area inside of triggers, out at resistance. Absolutely perfect. All right, Ron. Watch this. This is where we reverse engineer. I'm going to read what Ron said, and then I'll put my 2 cents in if I need to. So Ron calls this the counter trend, which means that everything's going down and he's going long. White bar, recognizing the reversal bar marker on the large chart, that's his target, really shouldn't work trade because fighting the trend is a great way to drain accounts. But let's go through it. He never saw this until he learned the high probability trend trade. So with the smalls inside of the large, that's weakness on both charts. Divergence seconds that weakness and the lack of desire to push down. No areas inside of favorable large triggers, more likely to continue up. And Ron takes quick profits after divergence, above all the trouble, and gets out at trouble. And guys, this is counter trend trade. This doesn't even resemble anything I teach in this room. This is a byproduct of the study that he put in on the high probability trend trade. And because recognizing momentum and path became easy for him, He began to see other patterns in the market, began to study those other patterns, and found a way to capitalize. Nice trade, Ron. And all it is, and I agree, it is impressive. All it is an understanding of momentum. And watch this. If we go back to the core, because he understands momentum, with weakness, the market is not as likely to push in the direction of the trend. So he's using the advantage and realizing when the advantage is gone. Divergence on the small chart supports the loss of momentum. He understands clear path. Whether it's up or down, I have room to my targets. And because he understands where the market shouldn't go, he can say, I'm where it shouldn't go for a short. Let me go long to trouble. And that's kind of the way he did it. Is he said, okay, when the momentum is gone, anything can happen. Is there a way to catch it the other way? When I have room going the other way, is there something I can look for to take it? And that's all he did. And it was fun to work with Ron on that. And we did. He asked for a little bit of feedback. I gave it. But that's your baby, right? That's good stuff. All right, so let's see what we have. This is Andy V, right? Andy V, I love it. Strong top, no triggers through termination that reverses the market. Taking that language, perfect lesson. Momentum, all the way until the smalls work their way back inside of the large. And on this bar right here, let's see, you got a fib update on this one, Andy. Right at midnight, the fib's updated. So at the bottom of your bar before the fib update, you had the potential to break. And this was the only fib that was problematic. Right about here. No, right about here, sorry, at 35. You had the potential to break because that fib wasn't there yet. You get a pullback right to resistance inside of triggers. And then the market goes down. And then with weakness, Andy, and weakness, and no areas on the market pushes up. That's where Ron goes long up to the reversal bar marker. Great read. And these, if the market had pulled back, Andy, absolutely. Trend trade, right? Trend trade entry at the red line. Let's change that language. Entry at the area inside of triggers. And that phrase, ladies and gentlemen, is going to pay dividends. Because look at this, Andy. Here's my large triggers. There's my areas inside. The language literally puts you in at the right spot. And my stop goes on the other side of the triggers where the market should not. Inside of triggers. It's such an important phrase. It's such an important phrase when you're looking for entries. And if you keep repeating that phrase, if you keep writing that phrase on your charts, what you find is that you know exactly where you want your trade. And Jen, if you're in here and listening, Jen, did you know where you wanted that trade as the market was still going up? Because as it's going up, you're looking at triggers. And as it's going up, you're looking at areas inside of triggers. And before you ever get a reversal bar, you're like, man, my entry is going to come from that area inside of triggers. Pretty cool, right? So guys, language really sets the tone. Language really sets you up. With only the potential to break, it could have gone from fibs. It could have gone from mid bands. It could have gone from fibs. Do you guys see that? Trigger lines define the retracement. Areas within trigger lines define where it's most likely to bounce. And then stops go 4 to 5 ticks below the triggers. And if you chose to take this trade, guys, you're probably still in it if you trusted your stops. Jerry S., on a medium probability trade with a huge gap back to the triggers, some of you will say, I'll get in at the lowest point and I'll risk 5 or 6 ticks below the triggers. I'm not willing, with a less than desirable look, to get in at the high point. Does that make sense, Jerry? You control your entry. And if you don't think it's perfect, it's your right to get in lower. It's your right to reduce risk. You do run the risk of missing the trade. But if it fails, you also have the right to not take a bigger loss. Caleb, perfect momentum. Caleb, are you related to Jen by any chance? Because you guys had the exact same read. All the momentum, potential to break, snap back to the fib. Beautiful. Should have let it flow to the next area. Why? You're in at 47, you're out at 34. It's just momentum. That's beautiful trade. This is textbook. Caleb, this is one of the most beautiful examples of a momentum trade that I could ever look at. I like this one. Great job, dude. Ali, let's see what you're doing, my friend. All right. Pivot stop out, odds favorable momentum, potential to break, perfect entry, quick profits, break even on the second. Dag nabbit, Ollie, outstanding. By talking about, and so Ollie, you get the gold star, and I get to make your chart an example for everybody here. Ollie says, and I'm going to put words in your mouth, correct me if I'm lying. I have all the momentum I could ever hope for. I have a perfect entry area defined, but dadgummit, I don't have a clear path. I will take that low risk entry, I will manage assertively and make sure that I get paid, and I will cover my butt in case something goes wrong. Ollie, this is the perfect 50-50 trade. Nice execution, really well done. Because he knows what he's up against, he knew to manage quick. Dig it. I like it. Miss Jen, let's see what you did. 2 triggers through. Large triggers are a full bar away. Tons of space. $200 risk per contract. Did not enter even though rules are met for a less probability trade due to large risk waiting for an up bar. Do you see how you guys are in control? And Miss Jen just exemplified it right there. I don't have to risk $200 a contract. I can choose to wait for a confirmation bar. Which means Miss Jen probably got in on this bar and made some money. I can't wait to see the second half of that trade. All right, John. Termination condition hit. Weak side of the triggers. Odds favorable momentum. Price gets above, pulls back. John catches it on the way up. Stop is below the low of the white bar up. And he's looking to ride it up to the next zone. Do you guys see it? So trading view people, do you see it? So first he says, what direction is the market going down? I'm going to annotate John's chart. It looks like he annotated the second one. So let's go to his second one. Maybe save me some work, right? Nope, that's his exit. Momentum long with a market flow signal through the mid-band and zone. So I'm gonna help for my newer users a little bit, John. And by all means, correct me if I'm mistaken. Guys, I want you to see something. Triggers say down. This is why I encourage you guys. Where am I in relationship to those triggers? So John is on the weak side of smalls that are down. And what this says to John is, If I get rules met for a long, I'm going to manage it like it's a short-term trade. And that's exactly what he did. John also recognizes price is coming from that zone. So price above that zone. He's on the weak side of the triggers. He knows it's not a high probability scenario because the triggers are still down. So his 1 minute becomes a little bit of a tiebreaker. His 1 minute chart has odds favorable momentum. His 1 minute chart has a break above the zone, then back into it. And then his 1 minute chart has that market flow green arrow, which is a breakout bar up as well. And John says with all of this momentum from the weak side of the triggers coming from zones, I'm going to get in. I'm going to have very little risk. But because it is not the best of the best, I'm going to try to get paid right at the next sign of trouble. John, did I sum that up pretty well? Does that make sense? My trading view people, it all starts on the big chart. What's it say overall? Where am I in relation to the smalls? It's volatile, so 200 per contract against the 15. I love it. 200 per contract. John's trading a 2-lot. So John, $400 trade based on just beautiful chart read. I might let you teach the class one day. $400 in 2 minutes. That's not a bad way to make a living. And for you trading view people, expectations, right? Expectations. If this trade does what it's supposed to do, where should it go? It should go right to the outer band. It should go right to that zone. If this momentum is really going to get its job done, that's my target. And sometimes it takes 10 minutes and sometimes it takes 2 minutes, but understand your expectations. And by the time John's here, he's probably got virtually no risk on the trade. All right, Miss Jen, while you were annotating, Morgan took your trade. Weak bottom, 50-50, strong triggers, no divergence, rougher look, so I took it at the bottom, then both contracts off at the same time because I'm in the midst of getting another eval pass, but there's also a fib right there too, so it works out. So Morgan, easy $200 trade, right back into trouble. Great trade, great management. Guys, you don't have to make all the money every trade. You don't have to make $500 a trade. You don't have to make $1,000 a trade. So watch this. If I make, this is math, so this is hard for me. If I make $100 10 times a day, 10 different trades, I'm still made $1,000, right? If I make $900 on a trade and then 100 on the other, still equals 1,000. If I make $200 5 times, it still equals 1,000. Guys, your account doesn't care how it gets there. When you see trouble, it's all right to get paid. When you know where it should stop, it's all right to get paid. Base hits, guys, base hits. Your homework, if you've never seen it, is to go watch Moneyball. Invite your wife, she'll love it. Brad Pitt's a hunk, right? Moneyball. The whole premise is he built a baseball team around the idea that base hits win games. Base hits get you paid. Ron C., that chili dog trade, it's 100% based on the idea that base hits win. Morgan, how are you feeling about your exit at trouble on a 50-50 trade? $200 on a trade that's failing. Outstanding, Morgan. Great job. So right now, I still don't have a clear path. I've got triggers up. I've got small triggers down. That's not my momentum look. Divergence on the potential to break, that's a deal breaker, and I'm on the wrong side of everything where the market shouldn't go. If I can't find my rules met, it's cool to do nothing. 3 triggers through. no divergence, strong triggers, bottom in, and there it goes. Coming from a strong bottom. I'm going to give you guys a cool little lesson. If your reversal bar pierces and closes below the area you're hoping creates a bounce, that area didn't create a bounce. Your brain can start looking for the lower area. Does that make sense? If your reversal bar closes below the area, that area is not creating a bounce, is it, Jen? That's when I look for the lower areas. And that's a pretty close one. Let's see if we can find another example. If my reversal bar closes on the other side of this fib's probably not creating the bounce. You can go lower. If my reversal bar closes on the other side of the fib, those fibs probably aren't creating the bounce. I can go higher. Does that make sense, everybody? Little entry thing. Jerry S., there's a little something for you. If my reversal bar pierces the fib, even if it's in triggers, I should probably look lower. And guys, it happens over and over. I just made it up. Not really, I didn't just make it up, but it's a pretty good one, right? If I entered at the area inside of favorable large triggers, I've already made my $100. I've already gone break even. And ladies and gentlemen, if this divergence is true, that's my exit condition for a potential to break trade. That's what the KISS plan tells me. That's what the KISS plan tells me. All right, let's go trading view and let's walk through it. This is crude oil. And of course, it's going to be right in a transition. Guys, small triggers up or down. What do you think? Well, now they're turning down, and now they're going up. So I can't really make a decision, can I? Price is dancing right on top of them, and they're going from up to down, up to down, up to down. I can't really pick a strong or weak side. I might be holding on for a second. Let's see what the reaction is. I'm coming from a termination condition here, but I'm also coming from a termination condition up top. Your first trade is when this termination, all my triggers are down. Guys, I'm selling an HVA line. I went one too low. Get over here. And riding it down to trouble. Whoa, what did I do? I pulled my NASDAQ off, sorry. All right, so let's just talk through it. Small triggers, up or down, guys. Talk through it with me. If you're on TradingView, are my triggers pointing down or are they pointing up? What do you think? Don't be shy. Shy people don't get the help they need. Nobody? These are down. Until they pinch and change direction, ladies and gentlemen, these triggers are down. But am I on the strong side? Am I in the transition? Or am I on the weak side? This is how I go through it every time I look at my chart. The market says down. My triggers say down, but I'm on the weak side of triggers, which means that if I trade short to go with the trend in the direction of the triggers, I can't fight the nonsense, right? So what am I waiting for? Waiting maybe for a little bit of a roll. There it comes. I'm waiting for some strong triggers. They're trying. And then with strong triggers down, with nothing in the way down, with triggers down, I'm going to try to sell a pullback to this zone. And I know before that trade ever sets up that if it gets above the zone, I don't want to be in the trade anymore. Does that make sense, everybody? What direction? Where am I in relation? Let me get my 1 minute chart. Let me get my 1 minute chart to follow along. And John sold from the 15-minute area. And Jose, you're absolutely right. There's your white bar. But the triggers didn't roll. Once they rolled, that was your shot right there. And I got a shiny nickel that's exactly where John Novak took it. First, it's the zone, right? It says down. Weak side, so I'm not going long. Notice John Novak is not going short yet. Not going short, not going short. Now the small triggers roll, and he takes the close below on the way down. And that's a pretty easy trade, isn't it? Does that make sense, everybody? What direction is the big chart? Where am I in relationship to the triggers? Can I let my small chart show me some change from trouble? Nicely done, John Novak. It's fun to be with more advantages than against them, isn't it? I love it. Great job. And now we're directly into an HVA. Now we're directly into the midband. Not taking a trend trade long, not back into a zone. I'm not going short into an HVA, into a zone. So what's my next option? Price breaks through trouble and pulls back with strong triggers, and we'll try to momentum trade down to the next step. From an area to an area, pump the brakes, and then we'll try it again. From an area to an area, pump the brakes, and that'll put us down here, and it'll be decision-making time. Does that make sense? Went short for here, trying to anticipate the trigger roll, and then got back on. Man, John Novak, if I had a nickel... So guys, everybody has a thing. Everybody has a challenge. Everybody has something that they do in their trading that they know isn't right, but they do it anyway because they get all excited. Mine is the same thing. Mine is I think the triggers are going to roll, so I'm going to go ahead and take the trade. Yep. But the smalls have to roll. That's the rule. And it's just a shade early. It's the right read. It's the great anticipation. And you guys that are good at reading charts, and you guys that are good at knowing the rules for your plan, you start calling your shots. The same way on NinjaTrader, you start calling your shots. And sometimes you have to take it twice, right, John? Just sometimes you have to. Sometimes the people in control don't give it up the way that you wish they would. So I support your decision to enter and your decision to enter the second time because it was still the right trade. Joel, odds favorable, clear path, pull back to the area inside of triggers. Not even 50-50 on the large chart, Joel, because a midband is only a termination condition if the large triggers are a full bar away. So it is perfect, followed by perfect, exasperated by perfect. Can anyone see any reason on these charts to not take that entry at the midband inside of triggers? Joel, this is perfect. Andy V, and let me do this real quick because Joel uses a bigger chart. Joel's smarter than me and is capable. I don't have the brain capacity, guys. I am all artsy, all fartsy. So check it out. A trade, the perfect trade, is momentum, is 4 triggers above trouble, is a pullback to an area inside of triggers, and you said quick profit. Beautiful. Do you guys see how all you have to do is learn how to identify momentum, get good with counting triggers at areas, and use the language for entry? Outstanding, Joel. John Novak, lack of divergence and lack of areas creates a bad high. 50-50 from a bad high, less likely to work. Odds favorable, potential to go. Off it goes. I think we talked about that today, didn't we? Good top, bad top. Good top, bad top. Yeah, John, we were doing that one. Either Caleb or Chariot gave us an awesome picture of strong tops, weak tops, and then what happens from strong tops and weak tops. So this is a weak top, and the market pulls all the way back to that mid-band. Large triggers don't blink. They're above the fibs. There's no short trades here, right? Because the reality is those buyers might be looking for a higher area. Recognizing the strong versus weak. I don't have momentum. Not a clear path. Sounds like you narrating at the beach. Strong top. You're welcome, Jose. Hey, Jose, keep showing up. Keep asking, man. There's a lot of people moving over to TradingView. And the only thing that I'm lacking in the education right now is a bunch of good questions to answer. So you guys on TradingView, help me out with that. Can you post this? John, this is your classroom. You can post anything you want. Guys, that's a collection of super great videos from lessons past. Remember, and John, I'm going to give, not just great, super great. I'm going to give a little bit of a disclaimer on these guys. If you're not comfortable with momentum, potential to break, right? There it is. Divergence kills the potential to break. Divergence kills the potential to break. Over and over, guys. If you're not comfortable with the basic concepts, you will find some of the other videos difficult to follow. You'll find the other videos giving you a little too much to think about. So if you're at a point and you're like, man, you know what? I'm comfortable with the basics. Let me go start expanding my knowledge base. That's where these videos really pay dividends. Ron, that's it, huh? I'm glad you're in this classroom. You've changed the lives of a lot of people with your participation. Isn't that cool? Bad top, straight into the mid-band. Large triggers don't roll. There's no short trade to be had. Say hi to the bikinis for me. How we doing? I know I had a couple people working on NinjaTrader entries. Did you get your answers today? I tried to go pretty solid on it. And look at that. Says down, weak side of the triggers, no place to go down here, and I'll be darned, there's your bounce. Right back to trouble. It's no man's land. That's fair, Rod. That is fair. This class is fun. I really do enjoy what I do. All right, odds favorable. Pulls back to support. All the triggers are up. So there's your first trade, outstanding high probability trend trade. And then your second trade, Joel, if I may, absolutely this area has the potential to stop the market, 100% because of the large chart look. Joel, there's a way, instead of hoping that the fib holds, because how do you determine your stop? Your stop is an arbitrary number at this point. All right, I'll jump in at a fib against odds favorable momentum with small triggers down. How much are you going to risk? Joel, one of the things you can do, your chart read is perfect. This reversal bar up, this confirmation bar, even if you catch it at the halfway point, It gives you some place to put your stop, gives you some place to protect yourself. It lets the market start to move in the direction that you want it to go instead of fighting all the immediate strength down. Does that make sense, Joel? 100% perfect chart read. Everything worked out great. Sometimes it's worth a couple ticks. Sometimes it's worth a couple ticks to get that little bit of confirmation in the direction, right? And then sometimes there's no need to wait for confirmation because it's perfect. Not perfect, it's cool to wait. Perfect, look at that sniper entry. Great stuff, Joel. Good stuff. And it all just goes with the large chart. S&P, darn near the same look as crude oil, isn't it? Triggers are down. Here was a momentum trade where it breaks, pulls back, gets to trouble. Once you get to trouble, what a great place to get paid. Let's wait and see what happens. We're the weak side of down triggers. Whoop. Now we're the strong side of up triggers. 38 is our next trouble spot. You can see it right here. So if I chose to enter on the pullback and the bar up, 38.50 is my first spot for trouble. 35 and a quarter-ish is probably where the market shouldn't go. Does that make sense, everybody? Smalls are up, strong side, above trouble, room to the target. Let me make that big for Jen. If I enter with odds favorable momentum, my advantage is gone somewhere right below this zone. Whew, that was close, wasn't it? And where is trouble to get paid? Well, 38.50 is a good spot. Doesn't guarantee the winner, but so far it hasn't gone where it shouldn't go. We'll see what happens. All right, Greg. Not quite a pivot stop out, Greg, because your second pivot didn't take out the first. That's actually a double top right at a fib, and then divergence tells you that they lost momentum right at that fib. Odds favorable momentum, potential to break, took the pullback to 1-to-1s inside of triggers, momentum, 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 potential to break, pull back to the area inside of triggers. Easy peasy. Does that make sense? Semantics. It's two termination conditions. So this is pretty cool. Look at that. The triggers get through and it comes all the way to support. And then they come all the way back to resistance and the triggers aren't even close at this point. What a great look. And man, great job, dude. Beautiful trade. And I hope that just kept going down for you. Nicely done. Was there a second one here? There was a second one here. Awesome. Let's see. Woke up late, so still a bit foggy. Been there, done that. And do you see how nothing said get out? I like your exit. You got paid, right? That's the goal. Greg, let me give you a picture, and I don't know if you've seen it in the room. Maybe you have, maybe you haven't. I want to show you something cool for holding trades, guys. As long as I don't get a close on the wrong side of those triggers, guys, the market will go down. If maybe I took half my profits and I'm trying to figure out on those Renko bars how far it's going to go, as long as I don't get a close on the wrong side of the triggers, it's going to go. Foggy brain. As long as I don't get a close on the other side, it's going to go. That's all right. When you can make money on a foggy brain because you understand momentum and path, life is good, Greg. Imagine how you're going to be with a little bit of coffee and a Red Bull. Whew! Going to be awesome. Going to be 32 flavors of awesome. All right, who do we have here? Artie. Bought, sold. Okay, so let me make sure. Okay, so sold, bought. Artie, can I ask you a question? Why? At 9:45 a.m., what made you feel like selling was a good idea? I'm assuming right here. And what made you feel like that's a good spot to get out? And the only reason I ask, and you don't have to answer in the room. You don't have to. Guys, you're never obligated. Okay. That indicator is up, isn't it? So all indicators aren't down. And at 32, let me see. 32, 33, 34, 35. I'm trying to figure out where you got in. I can't see your timestamps. That's 9:52 a.m. You entered about 9:45 a.m. So over here, you had strong triggers, right? And it looks like you had a clear path. I like it. And at 42, so we're actually all the way up here, Artie. I can't even see what's going on. So over here, your small triggers were up, but your large triggers were down. So all the indicators weren't down. Does that make sense? This is why annotation is important. Because if you show me this, it's awesome. Shorts are amazing. But if we go back to where the actual trade was taken, was that S&P or crude oil? I think that was crude oil, right? Let me double check. Nope, that was the S&P around. E-mini, right on. So let's take a look at it. I believe this is where we were. Back it up, back it up, back it up. And your entry was, and I think our charts look very different. Was this today? Just trying to line it up. 63.42, 63.42. So it was higher. The market wasn't trading until up there, 63.42. This is the S&P. So the one thing that I'm having trouble seeing, actually, was this it right here? It's hard to tell. This is one of the reasons why, guys, I'm a big fan. Make sure I can see it. So you had a 63.48 divergence high. Let's see if we can find a 63.48 divergence high. And I think this was it right here. And I'm going to pull back and I'm going to find that circle. And there you go. All right, there's your trade, right? Does that look right? Sometimes it's nice to see what's going on here. Yep, we recreated it. Nicely done, Artie. So let's check it out. Smalls are down, large are down, but we do have trouble, and that's what creates the bounce here. You don't just jump in. You let it roll. Oh, that still doesn't look right, does it? You let it roll. Let the small triggers go down. Let them get below the large triggers. Let it get below the trouble, and that's where you enter the market. Does that make sense? So you didn't catch it on the way up on the indecision. You let it come back down. Smalls below the large, synthetics are still down, and you're just saying, man, let's ride this thing. And let's ride it down to Fibonacci support because that's where the market's likely to stop. I love it. A little hard to dissect over here, but awesome. So the reasons that I talk about annotation though, Artie, how did you feel about that colossal winner? Pretty cool, right? How do you make it happen again? How do you repeat that good stuff? How do you make sure that you can do it again? How do you recreate it? How do you test it? So, Artie, I encourage you guys to write on your charts, not because I can't figure out what you're doing, because believe it or not, I'm pretty good at it at this point. So what you're doing, and this is for you, it's a recipe, Artie. It's a recipe for success. It's a recipe for you to be able to take that awesome patience on the entry, to take this beautiful look on the large chart, and to find a way to capitalize all the way down. And now, every time you see this, you are chomping at the bit because you have a recipe to never miss that trade. Great stuff, man. Nice job. And thank you for humoring me, guys. Everybody in the room gets the annotation talk at least once. But it really does. It makes life easier. It makes it easier to find the trades that you're looking for. And sure enough, with all the triggers up from a bad top, guys, the market went up. It's like you can predict. Like you can predict. How we doing in here? George T., how are you feeling? Where are my triggers? What direction are they going? Am I strong or weak side? Guys, at this point, shorts are going to be very, very difficult. My small triggers are up. I'm above all the one-to-ones. Just not much room to go up. Small triggers are up. I'm directly into zones. Just not a lot of running room. Small triggers are flat. They're trying to go up. I am above them. So they're kind of dancing. Is it weak side of down or is it strong side of up? Doesn't matter because there's just nowhere to go. It's okay to sit on your hands and do nothing, guys. Either let it break or let it head back down. And then gold is gangbusters. Small triggers up, but directly into an area. Above 32.47. This is where life was easy for you guys. This was the easy money. Strong triggers from an area to an area. Don't know if there was a trade. But now it's going to be a little more difficult until they're able to get up and above and things agree again. So good stuff. Good stuff. All right, guys, I'm going to take a few minutes. I'm going to run a lap. Oops, not yet. You have 3 sets of triggers. Whoa. On your 1-minute NASDAQ chart, not sure which to use. Jerry, are we talking trading view? Just want to make sure. Okay, so let's bring it up real quick. So when you drop down and go to trigger lines and go to settings, there's secondary large, secondary average, and this is something that the programmers had to do to make everything work. I just uncheck both of these and it sets me up. So instead of trying to decide which one to use, I just eliminate it and I make sure that I have strong triggers. That should get you where you need to be. And then John Novak, termination condition, but strong side of up. Lets the small chart roll and sells the HVA. A lot of trouble below. If this area is going to hold, he's going to try to hold it to the next area. If it gets above the zone, he'll choose to exit. And sure enough, strong side of small triggers up, all triggers above support. Guys, it's a tough look. It's a tough look. Sorry, John. They're messing with you. They're trying to figure it out. All right. Annotations for the classroom. Tell them what you were thinking, right? If I have to go after Artie, I have to go after JM. Tell them where your brain was. Guys, I'm going to take a few minutes. When I come back, we'll do the second half, last hour. If you have questions, post them. If you have comments, if you need me to change something in what I do, let me know. I'll try to incorporate something that works for you. If you're brand new, I am thrilled to death to have you here. Be vocal. Don't be afraid to be vocal. And guys, just a little invitation to you. If you're uncomfortable posting in the room, send me a message. Write me an email. I will answer. I'll be back in just a few minutes. Talk amongst yourselves. home stretch. If you took the short, 196 sure was a good spot to get paid, wasn't it? Sure was a good spot to get paid. Your husband's trade. Let's see what he did, Miss Cindy. Strong top. Termination that reverses the market. Strong triggers. Clear path. So the challenge here, Miss Cindy, is he's got a fib at 52. Oh, there it is right there. Okay, just double checking. So you are through. Clear path. Strong triggers. Perfect. Oh, so the only challenge here is your areas are on the wrong side of the triggers. And it pushes up beyond without a doubt. And then it comes back down, and then 3 divergences. It was too fast, didn't give him a chance to protect, and a pretty good loss. So first one is perfect, second one's a little iffy, and then the third one takes you out. And yeah, that's a pretty good stop loss. That's one of the challenges with NASDAQ sometimes, guys, is the NASDAQ is fast. And on Renko bars, it's really fast. One of the reasons I'm a huge fan of TradingView and those minute bars, divergence helps make it go up, up, and then there's the range over here too. So between the third divergence and the high volume area, smalls above the large, a lot of reasons that one was going to struggle to go down. Thanks, John. All right, S&P read. Strong triggers up, smalls are up, larger down. Strong side of the smalls. No clear path directly into a VWAP. One of those instances, the larger down, but the smaller up. While the overall thought process is probably up with the strong side of the triggers, there's just not a lot of place to go. Not a lot of room to run, which is going to make any long trade a little difficult. And because those small triggers are up so strong, it's going to make any short difficult. It's okay to avoid difficult. Most days there are too many options in the market to feel like you need to chase. And once you get comfortable with your rules and once you know exactly what you're looking for, what you'll find is that you're cool waiting. Hurry up and wait, right? Look at the Renko version. Yep. Jerry says, can you show me how to put the dots on top? So just click on a bar, Jerry, and right click on your chart and see where it says visual order. You want bring to front. And I don't know why that didn't bring it to front. Send to back. Bring to front. Click on the HVA line. There we go. Thank you, John. So click on the HVA line, right click, and then the visual order is bring to front, Jerry. There you go. Thanks, John. See, on my own personal charts, I prefer to not see those. Everybody's different. I prefer to not see them. I just don't need them. I don't use them. They don't fit into my plan. And I get distracted easily. But a lot of you guys will use those, right? If they're hanging, I can see them. Those are the ones that give me the information I need. Like a stranded buyer right at a zone. What a great look. What a great look. All right, y'all. What do you want to talk about? I've got momentum down. I've got no clear path into the one-to-ones. Hurry up and wait. All right, Miss Cindy. Can we call this an odds favorable momentum entry? So let's see what we did. All the momentum, none of the clear path. Directly into fibs, directly into one-to-ones. Not even 50-50, Cindy. Here's my fib. All of my triggers are above it. Do you see it? You're 50-50 on this one, but you've already reached the trouble here. So you are trading directly into a termination condition, but you do have 3 divergences from a high on the large chart. That's a good indication things may go lower. You've got that termination condition. You've got divergence from the termination condition. In before the areas and a huge stop. And then it comes down to the one-to-ones. Great place to get paid. Divergence from the one-to-ones. And then you get out just a little bit better than break even. It's a tough trade. It's a tough trade with nowhere to go. And then when we get to the second one-to-ones, John Novak told me something, Cindy. You may love this. And this was just his experience coming in, giving me a great lesson. When I have one-to-ones right behind a fib, it's like an overrun catch. And you'll see it a lot. You'll see one-to-ones right behind a fib, and maybe they get through that fib, and these one-to-ones are what end up stopping the market. And maybe that's something that'll help out if you're taking those trades. Let's see if we can find examples of it. Don't even have the one-to-ones around here. Right on the other side of the fib. When I see this, I feel like the fib is a little less likely to break. There's those 3 divergences up top. Sure enough, it does create a lot of movement down. One-to-ones beyond the fib, that's where the bounce comes from. Not always, but sometimes. One-to-one beyond the fib. So it is something that repeats itself a little bit. That may be helpful long term, just for taking those contracts off and being a little more aggressive on management when you see that look behind it. Good stuff. Large triggers are above the fibs. All triggers are above the one-to-ones. Can we agree that 33 is more likely to create that bounce up than down? Smalls are turning up, large are still down. Indecision over here. Just going to sit tight for a minute. There's a pivot stop out. Divergence. Price reaches divergence. Triggers above. There's your termination condition. But I do have momentum down. I don't have a clear path either direction. If you take the short trade, you're taking it directly into a termination condition and accepting full risk and lack of clear path. All right, guys, I'm going to mute. I'm going to mute. Tell me what you want to talk about. We still have about 30 minutes in the room.